Hello, I'm Michael Glass from michaelglass.com, where we make informed decisions about our financial future. This is our Forex technical analysis video update. Before we begin our video, we always like to start off our disclosures. Any symbols that you see today should not be inferred as a trader recommendation. No matter what form of investing you choose, stock, forex, futures, option, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our Forex technical analysis video update. In each of our videos, we will review the prior session's price action to come up with key support and resistance price levels. We'll look at the crude and gold charts to come up with leading sentiment. We'll come up with a low volatility watch list, an inside bar watch list, and we'll have an economic calendar update to see what could affect our future and open trades. And finally, if there's time, we'll have an education spotlight at the end. Let's pull up the charts. As usual, we are starting off with the gold daily chart, and we can see that we found a little support at the 20 moving average. The buyers came in and pulled it right back up, and we're continuing to move higher, possibly making another run to that 1900 price level. We can see that the volume has been in both on the pullback and on our move up higher, so there's definitely some volume. But what we told you the past couple of days was we needed to get above 1790 to make that run. And you can see once we finally got above 1790 here on Friday, we made our big candle run higher. Why? Because when we look at the past days, there was a vacuum of buying and selling. This was big push down, so that means that was light volume down, and we're seeing the light volume move back up. Our next resistance as far as volume is around this 1847, our point of control from several days ago, which is where most of the volume accumulates. So in order to make it to 1900, we need to get through this 1847, 1850 price level. Certainly, we are overbought on the 1 hour time frame. So with strong gold, what does that do to our pairs? Well, we can see that they are doing fine. When we come over here to our daily time frame for the pound dollar, you can see that the uptrend line that we drew a couple days ago is holding up fine. We came down, tested it, and now we're making move higher, certainly possibly to retest our former horizontal resistance or even our resistance as far as the uptrend channel. We can see, though, we did have a little light volume here on our push-up. We had volume probably trying to defend this channel, and then we had a little bit of light volume as we moved higher. When we come over to 1 hour time frame, we can see we just moved into the neutral zone. We're out of the buy zone. However, we are still below our long-term moving average, and we can see at the end of the day, the pound did take control. As the dollar leveled off, the pound made a little spike higher, and that's what allowed us to make this move higher into the close on Friday. So as long as the pound stays in control, this should move higher. Again, probably to test what's going on with our former resistance line before we make a move higher. But remember, it took us a while to break this 1.645 price level, and we finally got the volume to break through it. Will we once again see that volume to get us through this again? For our euro-dollar pair, certainly consolidating mess. What's good is that we did get a little volume, so this should push us up to our former resistance line of about 1.45, and that's great as far as whether or not we can actually break through it. We can see on the 1 hour time frame that we finally broke to the upside of our little channel that we've been watching, and we confirmed up there. So now we're above our long-term moving average. We are in a sell zone, which will match up with what's going on in the daily, where we have that resistance at 1.45. So we are in a sell zone. We're above our long-term moving average, yet the euro remained in control. Even as they came back together, we got that divergence, which allowed that price action to move higher. Again, the dollar leveled off. The euro spiked up. Euro's in control. As long as that happens, price action will move higher, and then we'll see what happens as we come into this horizontal resistance at 1.45. Finally, with the dollar franc, we can see that we finally did make that run to the 50 moving average. That's what we've been talking about for the past 2 weeks. When will we get there? Well, we got there, and notice that when we got there, we broke through, and then that sellers brought us right back down. Um, Volume was average though, so there wasn't like, and that's what's interesting about this. Whether or not we will continue to move higher, we don't really have that surge of volume that's saying push us through the 50 moving average. So we'll have to see. Clearly, on a 1 hour time frame, we're in a sell zone. We're actually outside of the bands, so we made that big spike, and then we just kind of hovered for the rest of the day. So we're in the sell zone. The dollar is in control. But really what happened here is that the franc really spiked lower, and that as the dollar leveled off, that allowed us to get this move up. But since the dollar is not moving higher, that's why we have sideways action, consolidation action, instead of continue to move higher. So as long as the dollar remains in control, we will see this break into our next price channel and break above the 50 moving average, but that's going to take volume to overtake the selling power. As we begin to look at our watch list, as we go into our Monday session, first we have our low volatility watch list, which is our 1 hour time frame using Bollinger Bands, and currently we do not have anything setting up right now. That doesn't mean it won't happen throughout the day, and we'll certainly try to keep you up to date on that. For our inside bar watch list, where we're watching the daily's range and comparing it to the prior day's range, we also do not have any candidates going into Monday. As we begin our educational spotlight, we've been talking about pulling the trigger and what prevents some traders from pulling the trigger, and it has a lot to do with the fears that we talked about before. But also, it's about how we manage the trades. And the big thing about pulling the trigger is how we manage the trade versus actually entering the trade. And so being able to deal with losing trades is one of those things that separates losing traders and ex-traders. Because if you can manage a trade, you can still keep your capital and move along, even if it's a bad entry. But if it's a bad entry and you don't know how to manage a trade, you will soon blow out your account and become an ex-trader. See, we talk about this all the time. Many people have systems that their account size can't handle. If you're trading something that requires you to have 50 pip stops, but that 50 pip blows out of your account, well, then you're not truly enacting the system right. And what happens? The pair immediately turns around and goes in your favor. And meanwhile, you stopped yourself out. So you have to make sure you have the right system. And then once you have the right system, you have to backtest it. These are all the things that we talk about all the time, and that goes directly to being able to pull the trigger on a trade. If you know that you have positive expectancy that the system works, and over time, even though this one lost, I know that the next one will win. That's how we overcome our fears, and we're able to pull the trigger and effectively enact the system time after time and time again. As you know, we have our videos on Facebook, YouTube, and Twitter. On Facebook, we have a page, Are You Financially Literate? And we have our same resources for you. We have our free 5-video course on high probability trading. Helps you develop your own, let you know what should be a part of your high probability trading setups as you're working through your own system. And that will give you a insight to our coaching style. And again, we believe that's truly what can take you from being an ex-trader, a losing trader, to being a profitable, consistent trader. Will help you one-on-one develop that personalized trading plan. More importantly, the trader's mindset, so that you can pull the trigger each and every day. Why not get paid to trade? It doesn't change the conditions, doesn't change the spreads. It's rebates for your forex trades. And then if you're looking for signals, we have a bunch of providers for you. Find the one that matches your style. Again, that's important. There's people who have winning records, but that's because they have 400 or 500 pip stops. That's not going to work if that's not what your account size can handle. Because in the end, it's not about the system, the room, the newsletter, if you can't pull the trigger. It's all about developing a trader's mindset so that you can be an effective trader day in and day out. Thanks, guys, and I'll see you next time.